Hi. Before we actually get into the flow of the course, let us first try and understand how people normally trade. You would find that some people trade based on their personal sentiments. If they are fond of a company or if they like a company or a particular thing, then they refuse to believe that the price of that thing or that company or that share can ever go down. That is called as personal sentiments. But unfortunately, the personal sentiments don't work in the market. The second type of trade you would find is people take based on their gut feeling, something called as the inner voice. But that is purely speculation, and I do not recommend speculation. This course is not about speculation or gambling. I really feel pain at times when a large number of people consider trading and speculation as the same thing. That is probably because they do not have adequate knowledge to differentiate trading from speculation. And the third type of people trade based on analysis. And I hope you are among this third category. Now we have to analyze what is happening in the market and in which direction the market or the price is likely to move, whether up or down. And this analysis is based on knowledge of the subject, the knowledge of the stocks, futures, and options, knowledge of the charts and patterns or technical analysis, and also knowledge about the market forces and the market sentiments. Yes, the market sentiments do matter. Your individual sentiments have got no meaning, but the collective sentiment of the market has a lot of meaning here. We need to analyze that. And then there are some people who trade based on confusion. That is a mix of all. They start their trade based on some analysis, and when the analysis starts going wrong, they depend on their gut feeling. And when their gut feeling also goes wrong, or when the losses increase, then they base their decision on personal sentiments and ultimately end up making losses. Now, before we trade or in order to trade, we need to first form an opinion. An opinion whether you are bullish, you are bearish, or you are neutral about the market or the stock or the trade which you want to take. That means your opinion should be there whether you feel the price will go up, the price will go down, or the price will remain in a range. And that opinion is formed based on some analysis. And that analysis is based on knowledge of the charts and the technical analysis, as I said, and of course the market forces and the market sentiments. Then once you have formed an opinion, you have to devise a strategy. There are various strategies, some bullish, some bearish, and some neutral strategies. Now, which strategy to adopt will depend upon your opinion, your fund status, and your risk taking ability. Opinion, I have already told you, once you form your opinion, whether bullish, bearish, or neutral, accordingly you will formulate a strategy. And then your fund status. Like any other business or profession, if you are trading, then you would require funds for trading. And how much position or what position can you take in trade will depend upon how much funds you are willing to invest. And then the risk taking ability. You see, there is a wise old saying that high risk, high gain, no risk, no gain. But that does not mean that if you take high risk, high returns are guaranteed to you. No, it does not mean like that. What it means is that if you are expecting high returns, then you should also be prepared to take high risk. You need to understand the statement very carefully. And my advice is never expose yourself to undue risk. because of lure of the greed. And then take risk based on your knowledge, not speculation, but only as much as you can absorb. Do not take risk more than what you can absorb. Do not speculate and bite only as much as you can chew. Now, about risk, we have adequately discussed in one of the other course, that is on the fundamentals and concepts, as to what is risk and how you analyze the risk. So coming back to the subject, we have discussed that first we form an opinion, then we devise a strategy depending upon several things. Now, let me tell you very clearly that this course is not about forming opinion or analysis. We shall discuss only the trade strategies. We presume that you will form an opinion based on your own analysis before you choose a strategy to trade. Now, if you know the subject well, if you know adequately about futures and options, how to trade in them, if you have adequate knowledge about reading the charts or doing some technical analysis, then you will be able to form your opinion. But please remember, despite best of the knowledge, despite best of the analysis, you cannot be right all the time. Unlike speculation, where your chances are 50-50, if you take decisions or if you make trades based on your knowledge and analysis, then the probability of you being right will always be high. If you can be right 7 out of 10 times or 8 out of 10 times, then that is good enough to generate a decent income based on your knowledge. I hope that makes the point clear.